creating in the future years. Now, let's go into the bear case scenario. Number one is the market price for the company. So it is sitting at about 66 billion. And this is a chart on Google that showed about all the different companies, car manufacturing companies in the world, and ranking them based on their market cap, and also showing the annual vehicle sales each company is producing. You have on the top Tesla, which is at about 734 billion market cap, and they have about 500 million or $500 annual vehicles per year. Then you have Toyota, which is only $250 billion market cap, and they are producing north of 9.5 million vehicles every year. Similarly, you have Volkswagen at 150 billion and producing 9.3 vehicles. Now, Toyota and Volkswagen might not look like EV vehicles, but still they do have that sector and they have a huge market share out in the global market. Then on the bottom, number 8, you see NIO, which is at about 66 billion market cap, way less than what Tesla and other companies have. But still, compared to the amount of vehicles that they're producing, this is something which was in the past about 43,000 vehicles per year. And this is nowhere close to the other people who are there on this list. So the share market has already given the price based on a lot of future growth that they are expecting from this company. So there's already a lot of future growth that is being incorporated in its current market price. So the margin of safety is very less in this company. So any mistakes that NIO does, well, say for some quarter, they were not able to produce or meet their numbers, or some other issues that happen, like the chip shortages that is happening, if it were to prolong, or any problems that NIO will encounter, that would affect the market cap considerably. So the margin of safety with this particular stock is very, very less. They have very less room to make any mistakes. Next, you have a list of all these different car companies. So the amount of competition that is out there. NIO, Tesla, they seem to be out there. They're one of the biggest EV manufacturers. But if you look into it, all the other companies are jumping onto it. Monish Pobrai mentioned that capitalism is brutal. It's almost like dog eating dog. And when you see something is working, like the Tesla working out, everyone else will jump in to take that share away from Tesla. And you can see all these different electric car companies. And these are just outside of China, not even China. And if you look into the companies that are in China, these are all Tesla, BYD, CAIC, NIO, Xpeng, Li Auto, Geely, Byton. These are all companies who are manufacturing or who are looking into electric vehicle manufacturing. They have a huge competition up there for themselves. Next is non-recurring revenue. When you sell a car, there's not much recurring revenue that's going to happen. And people tend to hold a car for at least 5 years. So it becomes difficult to have that recurring revenue coming out. Yes, at some point, the power swapping station would help in getting some revenue back with them on a recurring basis, but compared to the major chunk, it will be very, very less. Next, you have this particular factor about how many different EV vehicle manufacturing companies came out, but they all failed. Faraday Future, this came out back, and it was called as a Tesla killer, and it killed or it died by itself. Right now, you can see there's a resurgence going on. It's coming back to the market now. But yeah, it did died. Then you had the Jaguar E-Type, which was discontinued. This was another company which grown a lot of publicity, a lot of momentum out there. The Fisker Karma, this was also discontinued. Then you had the Dyson EV. You have NIO itself, which at some point, at one point back in 2019 and the beginning of 2020, it almost bankrupt, and it was almost about to die unless the Chinese government came in and helped out. Then you have the Chevy Volt. This is different from the Chevy Bolt. Chevy Volt is working out nice, but this is Chevy Volt, which was also discontinued. So all these companies, all these manufacturing companies came out in the market and they tried to take a jab on the EV sector, but they all failed. And Warren Buffett, back when the dot-com bubble was happening in 2000, someone asked him, there's the internet is, and he was not investing into any internet stocks back then. The dot-com was huge, something like the EV sector that's happening now. So they asked him, well, you understand that technology and the internet is a huge big deal, and why are you not investing into these companies? And Warren Buffett simply explained that yes, we don't deny that internet is the huge or the very big development for the humankind, and it'll go and take us to far off distances. And one of these companies, among all of these different dot-coms, there'll be one or two companies who would reach that top or who would go to that nirvana land, but there is no way for them to predict and understand which company would go. So hence, it was easy for them to just have a step back and just look at the show, have a popcorn in hand, and understand how the market is going. And surely, later you saw the dot-com bubble fell, and Warren Buffett came out to be true. But I'm not saying this could happen with here, but something to keep an eye, something to understand how the market factor plays and how other different competition companies are coming out and why NIO would be on top compared to the other companies. Next is this. These are a few factors that was happening. This is prior to 2020, prior to the huge run that NIO took place from the start of 2020's bull market. This is back from October 2019. NIO was deemed too risky as government cancels stocks for a factory in Huzhou. Think about it. Right now, NIO is seen to look like one of those companies which is China's favorite companies, especially with all these issues that are happening back in China with the regulators. You can still see that NIO is untouched and is immune to all those regulatory issues. But there was a time when NIO was considered risky because it was not receiving the right funding, the right help and the benefit from the government of China. And there was also talks about this particular investment that they were going to get from the Beijing E-Town capital for RMB 10 billion, but it never came out. They also publicized this. This was back in 2019, in the first quarter of 2019 call, that NIO announces new plant and a CNY 10 billion investment from the Beijing E-Town capital, but it never came through later on. Then you had this 10 billion yuan investment, NIO China headquarters settled in Hefei, China. This happened, and this news came out earlier in 2020, and that gave a lifeline for NIO to run. It was a huge capital investment company, and they were burning capital at a very high rate. Then now, with EV vehicles on the rise, the media has a lot of attention for EV vehicles at the moment. And any such articles that came out, this is back from 2019, and there are many such articles that you will notice where electric vehicle SUV fire reported in 1 month, or this crash, the autopilot crash, that crash. There will be any small mistakes. Media will take this out and blow it up for everyone to look into. And I mean, it's not that there's all the other companies that we saw in this list are immune to attacks. Everyone will have their fair share of accidents, but just because this company is in the EV sector, the media will tend to blow up this report, and this will affect the sentiments on the stock market. The next is the company itself is a huge capital intensive business, and that's something which Warren Buffett invited. The major yardstick for the biggest yardstick or the most important factor for Warren Buffett to look into or understanding the company, the yardstick for that is the amount of dollar invested returns how many dollars in the pocket. So basically, how much dollar do you need to invest in order to get some amount. So they're basically looking into the margin, what's the positive margin with the company. And in this case, it's a huge capital intensive business. You can look into this. The cost of revenue was 6.8 billion, while the revenue was 8.45 billion. Then the quarter for March 2021, again, cost of revenue is 6.4 billion. December of 2020, cost of revenue was 5.5 billion. So they are burning cash at a very high rate. And this is evident, especially for a growing company. But think about it with regards to what kind of return would you get in the future. The next is the competition that's available in the market. And when these types of competition comes in, it basically depends on the most foolish person who's willing to bet on everything. So this is a simple example. NIO has this free power plant package going on for new customers. So you can have a free charge and a free battery swap on NIO's expense. So NIO will take care of your free battery swapping, and it will also help you charge for free. Imagine your gas that you're putting down in your car free almost every time you go in there. That's the benefit that you're getting from NIO. And where is NIO getting all that from? Basically from the dilutions, basically from the shareholders' interest. And that's where NIO is giving out. Well, of course, they want to attract customers and they're doing these effects, but it was good if only NIO was doing this. Just look into this. Xpeng announces free charging plan for 3,000 kilowatt hours for each car per year. Then you have Tesla. Tesla gives Chinese owners free supercharging during the coronavirus outbreak. And when you have other companies who are jumping into this, then this power plant just becomes a competition or race to the downfall, where you're just trying to give out the best and the easiest and the most cheapest option for the customers. And that's where you're bleeding money from the shareholders. Oh, now I just want to share this information with you. This is just a research. This is not financial advice. Do your own research before you do anything.